What's up, y'all? Just Delano DJ Dello, favorite day trader, or one of your favorite day traders. I'm still still going through my emotions, Like I said before, I'm going through a re-education process of day trading. Basically, it's what I'm doing. I'm basically reteaching myself and taking it very, very, very seriously at the end of the day, because only person responsible for this journey and how I for my success and my progression is me. I can't blame nobody I watch on YouTube. I can't blame no schools I join or no discords or no prop firms. I can't do all that. I gotta take responsibility for my actions. But anyway, enough of that. Like I said before, start my journey over, and I feel good because I'm learning stuff I thought I knew, which I really didn't know, because I'm learning about the definitions, the terminologies, and most importantly, when I'm watching these videos, which is very important. Like I said, I watch what's some videos? A guy named Jeremy Cash that got me into this base that helped me insofar far as binary options concerned, and Doyle Exchange and Charlene, of course Lambo Rule and the Trading Channel, and I got who else I watch? I watch Chi Chi Trades. I watch Alex FX. I watch Q Banks, of course, and Smart Money Concept Trading, and a lot of Trader DNA, Smart Risk, and of course I watch ICT, and a couple of other ones I can't name right now. I'll name it during this video, hopefully. If not, then shout out to y'all for keep me motivated through this journey, showing me that there is possibilities of this. This got to take it seriously, and you have to sacrifice, and put in the work, put in the time in the books. Read the books on trading if possible. Study the definitions. Watch the videos that's teaching you how to trade, not showing you the lifestyle. Oh, I got this, I got that. All right, that's cool, but what am I learning from that? Besides being in debt because I don't know how to trade. The ones that don't, as a newcomer. And shout out to the ones that got their courses and teaching you, but then also teach you online and give you the basics. Because once you learn the basics of trading, it's up to you to find out the extra stuff and the more advanced stuff to it. And there are channels on YouTube that teach you it. But the key thing is you have to go on the charts and practice. You got to practice marking up your charts. You got to practice what time zones to trade on and which ones are comparable to this one. The higher time frames compared to the lower time frames tells me you know what I'm saying. It takes practice studying where is a trend, how to identify a trend, how to identify support and resistance, how to mark those up properly without getting confused and drawing too much stuff on it. As you can see, this chart right here is called a bear chart or a naked chart. I have no indicators on it, and like I said, I'm starting over basically naked. You know what I'm saying? And I'm using the knowledge to clothe me and the information and the desire to learn how to trade so I can be profitable at the end of the day. That's what we're in it for. But I'm not putting the money first like I was before. I'm putting the knowledge first and the practicing of it and the application and the remembering of it. That's what I'm putting first. So, I was watching what's the guy named Trader DNA and Wise Trade. But Trader DNA, starting over, like I said, they said it's best to when you're trading, do it on a bear market because the indicators is cool. But if you're looking for pure price action, which way the market direction shall go, a bear market gives you more insight in or a bear market or very few indicators. So if I do use an indicator, which I do use, I only use two. I only use the moving average, right, and the RSI. Boom. And within that, I use the 50 moving average. I use the 50 moving average, and and I use the EMA, exponential moving average, and my style is basically white times 3, boom, and the RSI I leave that bare. You know, I use the default settings. You know, I might change the colors up, but for this video I'm gonna leave it the way it is. So how I use this 50 moving average now, if you can see the white line, right? Now price or the market is below this. So clearly it's a downtrend. And how you identify a downtrend is with the lower highs and lower lows. Lower high, lower low. Lower high, lower low. That's constitute a downtrend. And for an uptrend, it's higher highs and higher lows. And it will be above this. So I try to keep it simple. I don't want to overcomplicate it. Like I said, I'm starting my journey over. I try to do more with less. You understand me? Do more with less. Keep it simple. As a new trader, when you're learning this knowledge and you're taking it seriously and you're really finding out the definitions of things and you're watching these videos and you writing stuff down and you're screen recording and you're going over the recordings to see how price moves and reacts to certain zones, keep it simple. Like, you know, I use my drawings. Like I said, if this is a downtrend, I would, you know, use this. You know what I'm saying? Like this. Now, if you saw earlier, I had an alert, which meaning that it reached a certain zone. It broke a certain, you know, zone, which I took away. I had it marked up, but I took all of it off. So it reached my price zone, and I'm saying, all right, cool. Now this right here, this is a zone. I call it a zone. Some people call it an order block. So how I mark it up is I will mark it up with a rectangle. Boom, like this. It takes practice. You got to practice this. Practice, practice, practice. You know, I would go right here. Sometimes I go towards the wick or the body, but I keep it simple. I go towards that. Go towards like go towards the closing price. This is the high at the bottom. This is the low at the bottom. This is the high at the top, right? And I use this. Boom. So now also I do is I mark this white, right? Mark this white. Boom. I go here. I make this clear. You know, sometimes I lock it, so I won't touch it by accident and get all twisted. You know what I'm saying? And just try to keep it simple. Ain't nothing overcomplicated. I go to the highest point. This is my highest point right here. So with this one, this is the highest point right here. Boom. What I would do with this is at the top of it, boom. And with this, I will mark it blue. That's my preference. You might have a different preference. And of course, with the background, I make it translucent, but it's clear. You know, I'm gonna lock it for, you know, trading purposes. And also, I meant to say, I no way this is financial advice. This is my analysis, and from what I have learned by me starting over how market works. Okay, and also sometimes before I even would go on my trade on the 1 minute, you know, on a 1 minute candle, and I use either now I'm starting to let my trades breathe because I'm studying liquidity, I'm studying fair value gaps, studying order blocks, studying, you know, zones, higher zone, lower zone. This is my higher zone or a resistance level. This is my lower zone or support level. And this would be an order block, meaning that price will come to feel less. And this would be my liquidity. See, this is my liquidity right here. From here to here is my liquidity. Now price, let me unlock it real quick. Let's put it as far as I can away. Now this, once price reach this area, I put a notification here. See, now this is my this is my alert. When price reach this alerts me. Either is price gonna break through this or get rejected. If it breaks through it, it shall go up a little bit more. But if it reach it and don't break it, then it's gonna trace back down. But like I said about liquidity, it's going to come up, grab all this. This is all liquidity right here. This is liquidity area. This is what drives and fuels the market, liquidity. So, and also a wise thing to do with liquidity is this would be um, a liquidity zone to watch or order block. As far as this is if price breaks this, it's going to continue to go up, maybe trace back down, but it's going to eventually reach here. So that's why I learned how to give my trades room to breathe. Like I said, expiration time is 1 minute, whatever. But if I'm looking to reach this area, and I know once it start breaking certain points, it's going to reach this area eventually. Now, how long? I can't tell you that, but I know it will, because from what I've been studying and back testing and even trading live account on real account, I see it works. Okay, works damn well too. So basically, what I would do with this is, since this is a zone, like look at this, this marks it, right? This is a pullback. It went up, now it pulls back. Once it breaks this, boom, see how it broke this bottom and it came back down. So once price breaks this bottom, it can go back up. See, if I was to trade right now, I would put an alert right here. Alert, once it breaks this, I know it's going to break this. Once this is broken, see, look at this. This is my alert. Once price breaks this, I mean, not by just break it, but the wick breaks it and the body breaks it, and the price with the green candle closes above this alert. Once it closes above this alert, I know it's going to continue to go up a little bit before it probably trace back down. But this is the main goal. This liquidity is where it's going to reach. All this liquidity is trying to reach here. It's going to play around a little bit, but it will reach here eventually. Because if you notice, I had certain things marked up. See, now price was all the way over here. Up here, boom. And I had an alert somewhere around here, somewhere around here. I believe it was somewhere around here. This is the silver bullet, which I learned from ICT. At certain times in the market, this is the London session. The New York session is from 8:30 to 3. London session is from 4:30 to 12 or 11:30. 4:30 to 12. And at the beginning of that session, within the first 15 minutes to a half hour, I believe, structure forms a fair value gap. And once that fair value gap, hold on, let me go over here, show you, right? Let me go back to that 4. Go back to that 4. Right here, see, this is what starts. London sessions from 4:30 to 5, right? So here, within this half hour, look at this half hour, boom, this is the minute, 1 minute candle, this is the fair value gap. If you notice, this is the fair value gap. What's the fair value gap? Where 3 consecutive candles meet, but none of the outside candles crosses meet. It just leaves a gap. So what you would do is you would mark it with the rectangle, right? Let me give an example. See this damn pocket options. The damn pocket options. Hold on, let me go back. Bring it with me now. Come on, work with me. Work with me. Work with me. Slow down, baby. Slow down. Fair value gap, right? Boom. We're going to start right here. Notice at the top of this, the close of this price, or the open of this price, the red candle. So now we would go right here. Let me disappear this real quick. See? Let me make this clear. Oh, go right here. Make it clear. This would be my blue, right? Blue. Boom. This would be blue. But make it clear. Boom. Save it. Look at this fair value gap. And in the middle is the consequent encroachment. So let me put a line right here. Line in the middle. Work with me now. Work with me. Come on. Come on. Come on. Put a line right here in the middle. You judge the middle. I would make this blue too. I'm gonna lock it. Boom. Lock this, I won't lose it again. Consequent encroachment. If you notice, I'm gonna zoom in. Consequent encroachment. It got touched by the green, then went up, but it didn't break past this. So now the red comes in, breaks past the consequent encroachment, and breaks below the fair value gap, right? Now 9 times out of 10, most of the time it retests it. If you notice, it green retested, but didn't break into it. Didn't even break into it. This is a strong sign of sellers getting strong. Excuse me. Now, if I was a trader, this is at 4:52 in the morning. Or like I said before, it's open at 4:30. Right? The market open at 4:30. Within a half hour, it should create a fair value gap somewhere. Once you see the fair value gap, whether it's a upside fair value gap, a downside fair value gap, it's a fair value gap. You know, it's a zone. You watch the price action, how it reacts to it. See it broke it, boom. You notice, get in. Once this retraces, you would get in right here. Boom. Came all the way down here, creates another zone. You notice, once this didn't reach, it came all the way down here. It respected the consequent encroachment, or it disrespected the consequent encroachment line. You know, respecting it is when it don't break below it, as far as the downside. So, if you notice, it came down a couple of candles. Came down a couple of candles. That's beautiful. That's what you want. You want this thing to go down a couple of candles. Okay? Very important. That price respects or disrespects that line to have a silver bullet trade. Once it disrespected it, retested, didn't even break inside the box. This is a strong sign of a downtrend. You know, get in on this next candle. Very important. It's not gonna go back up. It's gonna go once it get rejected off this box, this fair value gap. Go 1, 2, 3, 3 candle sequence. Once this got rejected, you can get in. You could bet all your money you got. Just get in for like 10 minutes. If you notice, get in right here. What I do, I always count from not the candle I enter, but the next candle. So I'll get it for 10 minutes. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Or whatever minutes you want. But just give it room to breathe. That's all. Look at this. This is a zone. See how it breaks through it? See how it breaks through? And the next one breaks through. This is a pullback. But it don't break past this. Now this one should close. But I'm learning this through practice. Shout out to ICT, Smart Money Concepts. You know, I incorporate some of those concepts into how I trade. I don't trade all of it. I study all of it, but I take the parts out that resonate with me, that I could identify with, that I could trade with and benefit from. You know, like I said, I'm benefiting from it as far as me learning how to do it. As far as the, you know, me this profiting from a big profit, not yet. That will come. Look, it's going to close red. See? Because this is broken. If you notice this, once zone is broken, it's broke. Boom. You know, you get in for 2-3 minutes. Don't you see this? 2 minutes. Or 3 minutes. 1, 2. You get in right here. Once this closed, get in right here. So 1, 2. Very important. You practice, you back test, you study. It's very also important that you screen record the progress and take screenshots. Mark up your zones, type your little words in it, and take screenshots. Very important. This is binary options. Pocket options, the platform and broker. You know, and it's very important to have more than one binary option broker. Very important. Look, see, get in right here. 1, 2, 3. It didn't break past this. 1, 2, 3 minutes. So you see, this is broken. Perfect example. Okay, and have faith and have trust and confidence in the process and of your trading. Now I was back showing you the silver bullet strategy and how that concept works. I wound up missing this, but I didn't want to trade it anyway because I'm done with trading for the day. And I try not to over trade where I'm like worn out mentally. Sometimes you get a mental drain. You mentally be tired when you over trade. That's why you got to keep your concepts simple. You know, like I got also a concept where of strategy where I do 3 to 4 trades. The most is 5, right? So if I do 3 trades, each trade I do, I'm gonna press this, whether I see a buy or a sell, a call or a put, I would press this 5 times or 3 times, 3 to 5 times I press it. So now if I'm trading 3 times and I'm pressing each time this 3 times or this 3 times, so now that's 3, 6, 9. That's nine trades I'm taking for each, 9 trades. So now instead of taking 1 trade, I'm doing 3 trades. I'm just doing it, the 3 trades 3 times, 3, 6, 9. Okay, but I'm making sure I'm I'm doing technical analysis, fundamental analysis properly, and I'm going by what I have studied and what I have going over my notes and getting in based off that. Not what I think I know, but based off what I know. Trade what you see, not what you think you know. Not what you want the market to do. The market is not going to do what you want it to do. It will do what you have studied it to do. Remember, this is a algorithm, meaning that it repeats itself. Patterns. Very important to study patterns. If you notice, look at this. It broke it, came down. Let's see, 1, 2, 3, 4, 5, 6. 6 candles. Remember, each candle was 1 minute. So you do a 6. Now it would take another 4 candles to reach back up here, or even 7 candles. Let me see, 1, 2, 3, 4, 5, 6, 7. It would take 7 candles to go back up here, or longer than that. So you gave, like I said, you give the trade room to breathe. Very important. This is to encourage somebody, a newcomer, somebody that's been doing it and having issues with it. Like we all have issues. We all gonna have issues trading because we gotta subdue our ego at the end of the day. It's not about making money. That should be last in your mind. It ain't just about making money, I should say. It's about making money, but it shouldn't be just about that. It's about you properly understanding this market and utilizing it for your advantage to make money. All right? Always put the money last. Put the knowledge, you learning it, understanding it, and your dealing with your emotions and your patience first, and your confidence. That should be first on the list. Money should be last. Because when you get this down packed, that money gonna come. It's gonna come, bro. Trust me, that shit gonna come. All right? And this right here shows the volatility of it. It shows how the volume of it, what's going down, So clearly it's trying to go back up. Because if you notice, this represents low volume on the sell side, right? And understand candlestick trading too, very important. I incorporate a couple of things in my trading. I want to be a complete trader, well-rounded trader. So at least I could use what I need to use when it's time to use it. Like I said before, I studied retail trading, fundamental analysis, technical analysis, smart money concepts, and ICT. I study that heavy. I damn near got a playlist on videos on YouTube, which I go to sleep listening to. Literally. Put my AirPods in, and I go to sleep listening to that. Okay? And when I go in the charts and practice and back test, I'm watching the video. Whatever the video is telling me to do, whatever the teaching it is, I go and see it on the market. I see it come to fruition. I see it. I could do the same thing. So now I'm studying. Now I'm building my confidence. So when I do it in real time, I'm doing it the right way. Like I said, I'm still dealing with my issues of having patience and not jumping into trade too soon or waiting for price. I got a saying too. Price action equals a trader reaction. When you know how price is going to act, you should be reacting to get into the trade or wait for it to give you some more confirmation or confluence. So it's very important. So I want y'all to stay encouraged. Don't get discouraged. This is a community. As a community, we should be able to communicate with each other or hit each other up, say, hey, how you doing? Or have constructive criticism without beating each other up or bashing each other. Because ain't nobody perfect. If you ain't trading like the big banks, and the damn institutions where you're trading billions and millions of dollars a day, then you're still on that low level, bruh. Trust me. No matter how much you think you got, you're still on that low level. But at the end of the day, we are retail traders. So our thing is retrading. We're following the banks and institutions. We're getting the money that they leaving behind, and we're trying to avoid the trap that they set for us. Okay? For real. But anyway, DJ Dello, I'm out.